Hello everyone, in today's video I'm going to talk about the Nio versus Tesla stock and to give you my idea of which one has a higher potential in a long term return. So we won't talk so much about the fundamentals and the strength of or so on and so forth, more from a investment perspective of which one could potentially give you more return, what are the risk factors, and a strategy of how to proceed about investing and profiting in the EV market. So let's go about a little bit of a figure, financial figure, to see where we stand. And I had done just a little while ago a video about the Nio sales and its potential sales figure in the just recently concluded April to June 2020 quarter. The figures are still not available as I'm making this video. The results will be announced on 11th August, a couple of weeks later. But right now we do know that we had 10,331 vehicle sales in this quarter, and therefore we extrapolate the December 19 quarter figure, in which it has 8,224 car sales that generated a revenue of $4,007 million. So in this one we expect it to be a $500 million, and in short we'll call it a $500 million in a quarterly sale. So that's about the Nio's most recent quarterly sales figure. And for Tesla, we know that the most recent quarterly revenue was $16 billion. So that's about 32 times the Nio's revenue. Tesla, of course, is much bigger than the Nio. And we are not going to compare at this point of time the profitability. Obviously, Tesla is a profitable company because it has been a while, and Nio is newer. Obviously, your initial, you have not saturated your sales, your expenses are higher, your R&D expenses are higher. You need to create new factories or rent other places, which Nio is doing to manufacture your sales. So at this point in this one, we will not take into account the profitability figure. The one thing I do want to stress is that Nio eventually may have a higher profitability because they are based in China, they have support for Chinese government, and they can utilize the lower cost base for their manpower and material to give out to give out the vehicles at a lower cost. So that being said, with this $16 billion revenue, Tesla is valuation currently, as I write, the share price is about $1,480. The valuation at this today is $267 billion, which means if you multiply 16 with 17, it's 17x its sales figure, which it's a quarterly figure multiplied by 17. So if you look at the yearly, this will be 1/4. It's 4 times the revenue, and I would say it's fairly priced because this revenue is for the COVID-19 affected revenue, and I expect that as the COVID-19 goes away, this should further increase to maybe 20 billion or 25 billion over a period of time. So in that case, this $1,500 that we are looking at the price is actually, in my view, is a little underpriced. And if you look at 2 years or 3 years down the road, I believe that this figure could go as high as the valuation could reach in the order of the Amazon or other similar companies, or Google or something like that. Tesla, so that's about the Tesla. At the same time, if you are looking at running it maybe 10 times, then that's not probably going to happen. $2.6 trillion is probably not possible, but certainly we can expect it 2 to 3 times of upwards potential. And coming back to Nio, this is a $500,000 revenue, and the current and its Nio's valuation here is for $500,000,000. Its valuation is at $16 billion, which means that if you look at this, is 32 times the quarterly revenue, or we can say that 8 times its yearly revenue. which is also again are overpriced. But the key things to keep in mind that NIO has a lot more room to grow because it's still in a nascent stage and it's still ramping up its production, its demand, and other things. So, in that sense, NIO has more room to grow. NIO can potentially grow 10, maybe 10 times from here, but I mean, to reach 10 times, its valuation would reach to $160 billion, coming close to Tesla, while Tesla is hard to go 10 times from here. So this is the factor that you need to keep in mind when you are buying whether Tesla or NIO. There are few things I would like to point out, not because it's going to predict something, just for the knowledge. It's hard to make anything out of it in terms of investment things. So the Tesla is much older. It was founded in 2003. It's a US based company, so you have some kind of more trust into that company. It's a lot of people have put in trust into it. They have been giving out the vehicles and their quality is known. They have futuristic plans. They have cars and automation and driving capacity and so on and so forth. They have a much larger fleet of vehicles starting from 38,000 at the entry level to all the way to 80,000 or more. Tesla, NIO has only two vehicles at the moment, ES6 and ES8, and they are bringing out their third vehicle, EC6, and that will start rolling out in September. So in that sense, NIO is much smaller, but at the same time, NIO also has more potential. So NIO could be churning out more vehicles in the future in 3 months, next 3 months or 6 months, and then Tesla has pretty much saturated. So the next thing is that NIO is based upon China, and therefore we may have less trust, less openness compared to US based company. So that's, in the one sense, it's more risky to invest into Chinese company. On the positive side, NIO has a battery swap technology, basically, which I think Tesla does not yet have. So basically what it does is, it solves the problem that you are driving on a long drive and you want to have a quick battery charging. So one way to do is to have an already charged battery and just swap it, and then you can again run off. So that's something NIO has been doing, and it's something that people have liked it. But at the same time, we have a competition for NIO from Li Motors, and Li Motors is going in a different way, which provides a battery vehicle, but at the same time they also have a gasoline based on the same car, just in case if you run out of battery. So with all those things and details, in my view, we missed at this point of time, as I told you about these videos, we probably missed out both these shares at their lower price. And the way I would benefit from you, and the advice for you, I already invested into NIO and I profited from it, and I will have some other video to show you how I benefit and all my investment. If you subscribe, you will have that video that I can show you at some point of time. The way you could invest in NIO, and I will have another video for it, is by using potentially a put sale. And that something is going to be difficult for Tesla, because in put sell you need to, for one put is equal to like 100 shares. So at 1450, the Tesla is too expensive to get into the put market for a common investor, while NIO is still, while it's at $13 now, it's still expensive. You can start playing with the put sells for as low as, maybe if you are, for example, a $10 put, you need to just block $1,000 or so. And the good thing about put is, let's say the prices top and to let's say $11, you can again buy do another put sell, trying to acquire that shares at a lower price. And if you don't get those shares, you at least get the premium. And because it's still speculative, the amount of the put sell premium that you will get is still high. So that's how I would advise you to invest into NIO. For Tesla, what you could do is, you could start with a small share, depending upon your capacity, one share, even one share or 5 share or 10 share could be good if you have a small amount to invest. And then for every drop, and that's another strategy that I have put in my another video that you can search for, is to, let's say if drops by 10%, for example, it's currently like 1500, if drops down to 10% or 1350, you buy and in the Tesla in increased quantity. So for example, if you buy one share at 1500, and if it goes down to, let's say, 1350, you buy two more shares of it, and you need to keep aside your money aside for it. So that would be my strategy. Both companies are good, but then there is market fluctuations. The overall market may go down, the individual stocks may go down. Although I see very little reason why Tesla would go down, but some of the things that I can think about is that the other manufacturers, all other car manufacturers, are not sitting idle. They are coming up with their own plans for car vehicles. They should start. They are a little behind, a little late, but when they come to the market, there will be competition for Tesla. The prices, we may feel a price pressure. Their profitability may go down, and their vehicle sales growth may go down. So those are some of the risk factors that you may want to keep in mind when you start investing into Tesla or NIO. Same thing for the NIO. There may be smaller players, including Lee Motors and other less expensive car manufacturers that may come into the market, and that will slow down the growth of NIO for that matter. So those risk factors must be kept into mind when you are investing into these vehicles. So I hope some of these perspectives is helpful for you as you start investing into those vehicles.